Protect yourself against infectious diseases like coronavirus and lifestyle diseases like high blood pressure using ultra-modern medical equipment such as face masks, N95 and three-ply face masks. Medical coverall suits and face shield masks prevents your body from getting in contact with a virus or bacteria. Often check your body temperature using infrared thermometer. Check your blood pressure using automatic blood pressure machines. This message is brought to you by Leviton Investments Limited, importers and distributors of high-quality medical equipment, located at Arowa Park Plaza, shop number 619 and 620 Bench, Wanoka Street. Leviton, caring for your health.
Hello, welcome to the show. It is the Money and Market Show. Now, we live in very tough times. Of course, what we're looking at from the economists is that Uganda's economy contracted in 2020 from highs of about 6% growth rate to lows of about 3.3%. Now, this is because of the impact the COVID-19 pandemic has had on economic activity in this country. But experts are telling us, well, all is not lost. There are certain flickers of hope where the country can anchor good hope for growth going forward. And we'll try to explore that in the economic update that the World Bank recently released about Uganda's economic performance. First off, now, we all know that Uganda's budget today stands at 44 trillion. That is the 2021-2022 financial year budget. Now, this is a Herculean task for the taxman to actually beat his side or his half of contribution to this financial year's budget. Of course, we're looking at over 20 trillion Uganda shillings, and questions are being asked where URA is going to get that money to actually beat target. We picked the mind of some experts on how this can be done, or some of the areas that can be looked at to mobilize resources to beat the target.
That the African Development Bank and IMF are offering a lot of countries or are rolling out programs to help governments with the fiscal spending and responding to the COVID pandemic. So if those can get down to companies, or that benefits can come to individual Ugandan companies or particular sectors, that could help. Yes, that could help. I'm cautious about saying increasing domestic revenue mobilization, whereby we need to find more ways of collecting money to fund our budget, such that we are not solely dependent on grants and donor flows. That could work. But talking also specifically to the financial markets, part of the results of the Absa Africa Financial Markets Index was that when it comes to the insolvency framework and the laws around insolvency in Uganda, there's still a lot of work to be done, and we need to improve those laws in the country. I know there's work being done right now on the national payment systems legislation, I think, and there were some laws that also were released last year, but still more work needs to be done to make that process easier and straightforward. And for the financial markets, for example, ring-fence financial market transactions like repos, anything that is secured by treasury bills or bonds or even cash should probably be secured out of the normal insolvency proceedings. That will give safety for people who are investing in the financial markets and confidence to allow them to come and invest in various ways. With the rollout of the financial of the primary dealership system in October of last year, gauging 3 months, October, November, December last year compared to the previous year, we saw an increase in activity of over 300%. 300% means that activity increased over 3 times. Yeah, 3 times, meaning that if people were trading 100 billion, it moved from 100 billion to 300 billion. And that's basically secondary market liquidity and activity that happened as a result of a reform that was brought about by a Bank of Uganda. That also helped increase Uganda's score when it comes to the index. Those are some of the things that benefited us. Areas for development for Uganda, capacity of local investors. Right now, Uganda's savings in the pension sector, and the pension sector is very key because it's social protection for after you're able to work. You're no longer able to work, and now you need money to take you through those periods. Uganda's per capita investment or savings per capita in pension funds are about $76, below 100, whereas in countries like South Africa, Mauritius, they're over $1,000 per person. So that's an area for improvement. How do we drive more saving for the future for Uganda? That's one of the things to think about. That's one of the areas to work on, and I think that's the pillar, capacity of local investors, where Uganda performed the lowest. Another area to work on, I talked about insolvency. That's the 6th pillar on legality and enforcement of financial markets master agreements. That's another area where Uganda really needs to work. Together with Frontclear, Bank of Uganda is trying to introduce what is called an umbrella guarantee fund, which basically shields or protects banks from credit risk or the risk of another bank becoming insolvent or bankrupt. And what that will do is allow more banks to trade with one another, give credit to one another, and spur activity in the financial markets. When you think about the Africa Financial Markets Index and its scores for Uganda, those are the 2 key areas that we will need to work on as Uganda to step change and move up higher. We are already shining in areas like access to foreign exchange, and that's commendable on the back of our level of reserves, which are about 5 months of import cover, and our stable exchange rate and liquidity. Now we need to work on other areas we are not doing so well, and those are the 2 areas.
The World Bank has released a report about Uganda's economy. In, of course, the economic update it normally gives us. We try to pick out some of the key areas or elements of this report to help us understand where we're coming from and where we're headed as an economy. Close to 60% of total revenue collected domestically will go to debt servicing, a situation that is today worrying economists. Uganda is today running a deficit budget, which simply means that it's spending more than it collects in both revenue and non-revenue sources. As a result, the country has had to borrow to plug the gap.
Expenditures have increased to a record high of 25%, and the deficit is currently about almost approaching 10%, 9.9%. And how has it been funded? By increasing borrowing domestically, but also on non-concessional terms across the world.
The non-concessional terms upon which Uganda has accumulated the bulk of its debt, especially from China, is what is today worrying economists more, as highlighted in the recently released World Bank Economic Update report.
And in terms of the structure of debt, Uganda has to pay much faster because we are borrowing at shorter term. We are borrowing at higher interest. So in terms of percentage of revenues, these debt and interest payments are actually now taking up a much higher percentage of close to 60% of the revenues, which is not good.
To economists, the country has to rethink its expenditure priorities, but most importantly, continue to stimulate the economy for growth in key areas such as private sector credit. The country's economic hope, according to the World Bank, is currently partly seen in improving growth figures.
Because we see that investments have started picking up. Consumption, which is a very critical element of also livelihood, has also started picking up. We see a flicker of hope in these developments. And when you look at GDP growth over the last 3 quarters, it has been a consistent increase over the last 3 quarters. Before the last quarter, this particular quarter that we're dealing in, that we're living in. So we hope that growth will probably be around 3.3% by the end of this financial year. And it's expected also to recover to about 4 in the next financial year, driven by agriculture, first of all, manufacturing that has also started picking up, and the telecoms industry, which fortunately has probably picked up because it has come in to save the world. We all know how much we are using the ICT today.
So as Uganda embarks on the new economic journey, which will take it through the new financial year, and one marked by an unprecedented crisis of COVID-19, economists believe that prudence in public expenditure, balanced with support to the private sector to sustainably operate, will be key in helping Uganda bounce back to pre-COVID growth trajectory. That winds up the first segment of Man and Markets. Don't go away. We still have more coming.